Hey folks, so I just wanted to make a video because there's a lot of interesting stuff going on. So obviously, we had Nvidia earnings that were up crazy. I believe it was like over $70, and it was over $80 at one point as well. So Nvidia has definitely pumped the Nasdaq up in the after hours. So if we're just looking at the futures market right now, we can see that the Nasdaq is up 1.35%. The S&P 500 is up 0.37%. And the Dow is actually down, and the small caps are actually down as well. So I've been talking about this tale of two economies, where we're seeing a lot of these cyclical stocks underperforming, and we're seeing tech outperforming. And tech valuations right now are absolutely crazy. So let's just talk about some other things. Right now, I kind of want you to drown out Nvidia. I want you to drown out AI. And I want you to drown out just the debt ceiling. And let's just talk about things that I think may really affect the market in a longer term period. So, what I think is going to affect the market in the longer term, and when I say longer term, I really just mean like within the end of this quarter possibly, is really just liquidity. And we're about to have two events that could drain liquidity from the markets. Now, the first event, I talked about in a few videos ago, and that was essentially the $1 trillion drain that we could have after the debt ceiling is lifted. So essentially what's going to happen is that, a flood of T-bills are going to enter the markets, and then that's essentially going to pull liquidity out of the markets. Now, it's not pulling liquidity out of the markets forever. We have to remember that the United States, they fund themselves with debt. So they are going to essentially spend that money through government spending, and then that is going to circulate back into the economy. But in the shorter term, we're pulling that money out. Now, in the shorter term, we're also going to be pulling money out through quarterly corporate tax drains. So right now, I am on the PwC website. Now, if you don't know what PwC is, it's PricewaterhouseCoopers. It's one of the top 4 accounting firms. Now, right here, they're saying for calendar year corporations, the 4 estimated payments are due by the 15th day of April, June, September, and December. So a lot of corporations, they pay quarterly taxes. So, here on June 15th, we're going to see a quarterly corporate tax drain. So that is going to be pulling money supply out of the markets as well, and it's going to be funding the governments. So, now let's just go ahead and jump into the technicals. Now, I'm not going to cover every single stock, but I'm going to cover what I think you should pay attention to in the short term. So, just first things first, let's just go ahead and look at the Fed Funds futures here. So if we're looking at the Fed Funds futures, the spread between the May and December contracts, we are now just looking at a negative 0.12 reading. So in the past, this was almost like a negative 0.7 reading. So in the past, we were saying, hey, we might get 3 rate cuts. But as of now, we're just saying, hey, right now it's looking like we may get 1 rate cut or we may get 0. Because as you guys can see, it's right smack in between 0 and negative 0.25. So there's a little bit of indecision whether it's 1 rate cut or no rate cut. So, generally when you see that mid-level right between any 0.25 increment, that's essentially what it's saying. There's a little bit indecision here. Now, let's jump ahead. Let's look at the Qs. Now, if you're looking at the Qs, right now, there's 2 main resistance trend lines that I'm paying attention to. So this one actually goes all the way back to this support area right there. So now it's acting as resistance right here. So we also have this other trend line right here that's connecting these tops. So you guys can see that both of these are actually in play right now. So if I go on a shorter time frame, let's go on the 10-day 5-minute, and I'm just going to zoom in just a little bit right here. So you guys can clearly see that we have this upside gap. It was not filled today. Now that trend line right there, we rejected off that today. But as you guys all know, Nvidia had a crazy skyrocket earnings. So what's that going to do? That's essentially going to take us right above this area. We're going to gap right above this. And as of now, based off the futures market, this could go all the way up to around 336.50, maybe even higher. Maybe it could go and fill this gap right up here all the way at if we want to fill this one, that's all the way at 337.34. So imagine having one gap that essentially just skips right through both of these. So that would be crazy in my opinion, because if you have one gap that's not filled and then you have another gap that just gaps right above it, then guess what? You have a double gap. And I can kind of show you what this looks like. So you can see an example of this on Apple. So I'm going to go on Apple. I'm going to look up the 90-day 1 hour chart, and I'm going to zoom in. I think it's right around here. So let's see if I can find this. So I think, let's see, where is it? Where are you? Where are you? Yes, it's right here. So as you guys can see, we have this gap down, and then, hey, you know what? We consolidate a little bit, and then we have this gap up, but we never really filled the gaps, as you guys can see. So then all of a sudden, you see this move, and that's essentially filling that gap, and then you see this one candle down that's essentially filling both of these gaps right there. So yeah, that's definitely an interesting development that you do tend to see when you do have these double gaps. You tend to see them get filled because price kind of acts as a magnet, and then this could be some form of distribution. So this right here, when you see stuff like this, it's just proof that we're in a kangaroo market. So now let's go back to the Qs. And another thing that you really want to pay attention to is just the MACD and the RSI. So we want to look at the day chart for this. So if we're looking at RSI, we recently went into this oversold or overbought condition, and I called that out in a few videos ago. And we had a pretty substantial sell-off from where we were over here, but then if we do have that gap up tomorrow, that's going to bring RSI back up. So watch for RSI to go back over 70, and that might not be a bad area to take a short position, because we see it in the past. RSI doesn't last over 70 for long, and then sometimes when you see that 70 handle hit, it just reverts all the way back to oversold to that sub 30 handle. So sometimes you see this just these massive moves up to 70 plus RSI, and then these massive downside moves back to sub 30 RSI. So you definitely do want to pay attention to that. Also pay attention to last time we got 70 RSI here, we didn't quite make it to that 30 handle. We made it to around 41-ish. So do be careful and just watch for these RSI bottoms here. So let's say that we do get back up to the 70s, and let's say we sell back off, and then maybe we go over to around 40 RSI. That might not be a bad area to take your profits if you are going short. Now, going long, I would not recommend it, especially after the gap. And like I said, you want to pay attention to where the RSI is at. You do not want to go long around 70 plus RSI, because that's definitely putting a lot of risk on you. And pretty much any time that you hold that contract, let's say you're getting a call, if you hold that contract overnight, then yeah, you're pretty much risking for a substantial downside move to occur the next morning. Because like I said, there's a lot of events that could take place that could essentially just screw you over big time. So, these last 2 days, people are saying, hey, you know what? Stock market takes the elevator up, it takes the stairs down. But, if we're just looking at the S&P 500, 2 days of price action pretty much took us right back into that 410 trading zone. So that's definitely something that you do want to pay attention to. Now, the other thing, obviously, if we go back onto the shorter time frame, if we do gap up, watch for this trend line right here, especially if we gap up over it. So if we gap up over that trend line, we could just fill this gap right there, see how we react when we back test that trend line. Or let's say that we gap up and then we actually gap up to that trend line. See if we can get above it or if we reject. So that's something that you do want to pay attention to. And like I said, we're likely going to have that double gap scenario where both of them are not filled. So that could act as a price magnet to in the future. Now let's go ahead. Let's look at the SPY. So I want to go over to the 10-year 1 day, and just look at where the 50-day moving average is. So 50-day moving average is at 407.92. So if we were to fall more, that could act as support. And if I zoom in, you can see right here, we're consolidating sideways, 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 massive rally, and then we kind of tanked. So we're right back into that trading zone that we were at for a long time. So is this actually a false breakout? Is this a Wyckoff distribution event? So let's go ahead, let's take a look at what a Wyckoff distribution event looks like. So right here, we go sideways for a little bit. We have this breakout moment, and then, we maybe have like a short period of time where we stay in this zone, and then we dump. So if this is Wyckoff distribution, I believe that we're right around here, and we're about to see that rally right there. And then this could lead to a further dump. So do be cautious, because take a look at this chart. Take 5 seconds to look at this chart right here. Just take 5 seconds. Now, take a moment to look at this chart right here. So we want to focus right there. Tell me that this does not look similar to this Wyckoff distribution event right there. So, sideways, massive rally that broke the range, right back into the range right there, and then followed by a pump. So are we going to get that next level dump? That is something that you want to be very cautious of. So yeah, let's go ahead. Let's look at this chart again. So yeah, sideways, massive pump, dump, right back into that zone. And then, in the after hours, we actually got a pump because of NVIDIA. So we're going to see another pump right there. Now, if we go on the shorter time frame, let's just see what's going on. So let's go on the 10-day, 5-minute chart. So right here, we do have this gap. We did not fill this either. So let's just say that, first thing in the open, let's say we just gap all the way up, and then let's say we're right around like 413-ish or 412-ish. Well, then maybe we could fill this gap real quick. But then, like I said, that kind of leaves us with that double gap scenario where, things do kind of look a little bit funky because we didn't quite fill it right away, because we filled it essentially with a gap. Now, right here, we do have another gap right there. And if we do want to fill that gap, that's right around 417.54 to the upside. So it's very possible that, this could be that rebound rally. But, definitely do be cautious. So let's go on a shorter time frame here. Let's go on the 30-day, 30 minutes. And I just want to draw this little trend line right here. So we're just going to draw that trend line right there. We're going to connect these guys right there and pay attention to where that gap actually occurred. So you can see that basically in today's pre-market, we dumped right below this trend line. So that didn't even give market participants the chance to defend that, because we just gapped right below that in the pre-market. So, if we do get back above this trend line, can we hold that trend line? That's going to be important. Can we hold it? And, like I said, we do have that gap up above. So it's very possible that, maybe we fill that gap, and then we get above this trend line right there, and then we could fill this upside gap as well. But then what happens after that? That's very, very important, because like I said, this could be a Wyckoff distribution event. Something that you need to be very, very cautious of, because the downside move is a strong downside move. It's going to be very hard where, if you're a call options buyer, it's going to be very hard to get away without making a big loss, especially if there's like a 4 or 6 point dump first thing in the morning. So be very, very, very cautious right around here, because we did have that false breakout right here. And now this could just be the rebound. So be very cautious. So what I'm definitely watching for is, are we going to get back above this 415 level? Because you guys can see that, we've had a lot of rejections right around this 50% retracement level on the fibs. So that's 413.54. So, that is pretty much right around the gap is, but we could get above that gap, and we could go back and back test this trend line. So that would put us right around like 415-ish. So definitely do be cautious of that. That's definitely my scenario for SPY. And if we get above this trend line, do possibly look for this gap fill. But definitely pay attention to any sort of rejections on this trend line right here, because that could be a very big deal. Now, let's just go ahead, pay attention to the MACD. So if we are looking at MACD right here, every single time we do try to get this bearish MACD right there, you do see some sort of move that tries to uninvert this. So you basically see the markets messing around with you. You know, there's giving you this MACD sell signal, but then the next day they try to invert it, and then the next day they invert it. So things get really crazy when you do see that initial MACD crossover, because you know the markets are trying to fool with you. You know, there's a lot of other people who see this, who might be shorting, and then you know you see these massive rallies that squeeze them right out of that. So definitely be cautious of that. And then the next thing that you want to pay attention to, you're going to want to essentially look at the VIX and VXN. So if we're just paying attention to VXN, let's go over and look at the 10-year 1-day. And now let's just look at where we're at right now. So we pretty much got back above this macro level trend line right there. If I go on a shorter time frame, the 30-day, 30-minute, let's just zoom in right there. So there was this gap right there. We pretty much just filled that gap right there. So that would have been a good place to essentially take profit on your puts, because you know you saw that gap on VXN get filled. But then now here's the next scenario. If the Qs have that massive, you know, like 1.5% gap up in the morning, guess what? You know, VXN is likely going to have a gap down right around these levels. So we could possibly just create another gap right here. You know, maybe we gap all the way down to like 20 or something. Well, guess what? Now we have another upside gap that we need to watch out for. So definitely pay attention to any sort of gap that occurs on VXN on these shorter time frames. Same with the VIX. So you know, you guys can see that I've been talking about this gap on the VIX for a long time, and I've been saying, hey, you know what, these usually get filled within 2 weeks, but this time, you know, it took a little bit longer than 2 weeks. It was 2 weeks and then a few days here. So you know, I was mostly within that area. So hey, you know what, now we saw that gap essentially get filled. And then we did a little bit more than that. And then where did we close? We essentially closed at the top of that gap fill. So, you know, if S&P 500, you know, gaps up in the morning, guess what? We're going to have a gap on the VIX. Now, if you're just looking at the VIX on the shorter time frame, well, guess what we also did? So let's just go on this 10-day 5-minute. Well, we also created this gap right here. So you guys can clearly see that if we want to fill this gap, that's going to take the VIX all the way back down to 1868. So let's say that tomorrow, you know, price action is pretty darn bullish. Well, you know, where you may want to be a little bit more cautious is if the VIX comes all the way down and it fills that 1867 level. So pay attention to that. Now, another thing that I want to show you is, you know, on the weekly chart of the VIX, we can clearly see that the MACD is crossing over. So be very, very cautious, because we're starting to see MACD cross over on the weekly chart on the VIX. That's never really a good sign. Now, it could easily uninvert here if VIX essentially just gets crushed tomorrow and it gets crushed on Friday. So that could uninvert itself. So, but you do still want to be cautious, because like I said, you know, we could be in a Wyckoff distribution event. We do have liquidity events coming up. And, you know, I do know that everybody's crazy about AI, crazy about NVIDIA, and, you know, everybody's thinking, hey, you know what, Google, Microsoft, Meta, all of these stocks are going to rally because NVIDIA rallied. Maybe that does happen, but then maybe that's already priced in. And, you know, maybe the 20% some move that we had in the after hours for NVIDIA, maybe that could be the top. But, you know, I definitely recommend that you don't go shorting NVIDIA, or you don't go messing with NVIDIA, especially after that earnings. Because, you know, let's say that you short NVIDIA right away. And what happens if the next day, you know, an analyst says, I'm going to upgrade my price target to 500. Another analyst comes out, they say, I'm going to upgrade my price target to 600. Another one comes up, I'm going to upgrade my price target to 700. Well, guess what the stock's going to do? It's probably either going to rally hard, or it's going to consolidate for a little while, and it's not really going to fall. So, you know, let's just take a quick look at NVIDIA. So if we're just looking at NVIDIA right now, and let's look at the 10-year 1-day, and let's just pay attention to the RSI. RSI is at 62.45. What do you think RSI is going to be after the earnings? It's probably going to be well over 70. So just watch out for what the RSI is going to be on NVIDIA on tomorrow's open. It could easily be like 80. And, you know, are people really going to want to go all that much more bullish when you're seeing RSI of 80 plus? Look what happened to Google. So let's just go over, let's look at Google. So Google RSI was like 80 over here, and now it's substantially fallen back to 66 with that pullback. So definitely do watch out for these things because like I said, you know, when RSI gets really high, it gives people a motive to sell. So hope you guys enjoyed this video and have a great one.